It's that time again. Third quarter earnings season is here. What companies are going to kick it off? Well, of course, it's the banks, but I know you're all bored by the banks and don't really want to talk about them. But I'm going to cover them this week because they do lead us off. But there's several other companies that we should be taking a look at as well. They're going to give us some interesting guidance into some key industries like the transports and manufacturing. What are they? Let's dive right in. Okay, the first one is the one on manufacturing, and it is Fastenal, ticker FAST. And this week, I've decided to bring our more advanced price consensus and EPS surprise chart because I wanted to look at both what is happening with the estimates, the earnings estimates, as well as their earnings surprise track record. So you can see the earnings surprise track record is the green and red arrows. That is the beat or the miss. Obviously, the red is the miss. As you can see here, 2 quarters ago, it was just 1.89% there. Fastenal has been beating on just these small amounts always. That was a meet last quarter. But the more interesting thing is you can see some of the earnings estimates now on the decline here. So the analysts are getting a little more pessimistic on what's supposed to happen in 2025 and 2026. And Fastenal is on the fastener side. They do a lot of construction. Also, manufacturers use their products. So they've always been kind of a bellwether for manufacturing, but that's been in a recession for the last 2 years. And this chart definitely doesn't reflect a recession. So what are they going to tell us this time? They're not cheap, trading at 34 times forward earnings here, but I'm going to be watching this one closely as I do every quarter. Then we're going to switch to the transports and we're going to get the start of the airlines. And then quickly following, we're going to get the railroads. And now that the port strike has been settled, at least for now, we are, in the free and clear on the shipping side, but it still is probably going to have some ramifications going into this fourth quarter, actually, on some of the transports. So, that's why it's important to look at these airline stocks, also to get an idea of what's happening with the leisure side of things on just the travel. Everybody was in a travel obsession this last summer. Delta was one of the big winners of that because it's got a lot of flights to Europe. But what is it looking like over the holidays and even into next year? Now, looking at the chart on Delta, you can see it's a little bit iffier on the beats and the misses because that's just kind of how the airlines roll. And you can see during the pandemic, it was terrible, as you might expect. Very few people flying then. Then we had the breakout when the economy reopened. Then it got a little bit of more of a struggle. But these shares are just kind of staying in this narrow range. But look at the earnings. They are expected to grow here, but also coming down a little bit off of those earlier in the year highs. So maybe a little bit of the bullishness starting to be pulled back in here. We're going to see on this earnings report, but Delta always kind of kicks off on the transports. And so what they say will have a lot on this area. And so I'm going to be watching. And then we're going to switch to food. So early on is one of the big names. I used to call this the beast of the restaurant industry. It has been overtaken once again by Chipotle, but Domino's Pizza, ticker DPZ, still crushing it. But look at this chart. It's been wild all over the place. It really crushed it during the pandemic. It was one of the few fairly affordable family type of foods you could order and have it just delivered. They already had the app, so everybody was using it. Then the shares sold off after the reopen. I didn't need to order Domino's quite as much anymore. And now shares rallied again off of 2023 lows, and it has pretty good earnings surprise track record the last couple of quarters. The last miss wasn't until 2022. But look at this earnings growth. This is what I've always loved about Domino's. It had a few iffy years when the reopen happened, but now it's back on track for these big earnings jumps. Will it be able to do it? And has the consumer returned because of the value you can still get with Domino's Pizza in this inflationary environment? You think Domino's might be doing pretty well under those conditions, but we'll see. But I'm going to be watching this one, ticker DPZ. Then we are going to get the banks. So I would be remiss if I didn't talk about a couple of them. And so I'm going to do so. We're going to start off with the most important bank, or at least how most people couch it, JP Morgan Chase, ticker JPM, led by Jamie Dimon still. He's still there, hasn't retired or left. And he's always been kind of the guru of the banking sector since the financial crisis. And we all await his earnings call to see what he's seeing in the economy through JP Morgan's own business. Now, these biggest banks have the biggest reach. They have not just regular lending to businesses, real estate firms and the like, but also they are huge on the investment banking side, which has been very much a laggard here. We're not seeing many IPOs or SPACs. That is still very low numbers, even though we've had this rebound in the stock market over the last year. But a lot of money remains on the sidelines. That's going to impact the investment banks like JP Morgan. But how much is it going to? A lot of this has always been priced in. And just looking at this chart, you can see shares have busted out to new all-time highs this year. And they've got a very good earnings surprise track record. The last misses for them are also in 2022, just like Domino's Pizza. So they put together a nice record. Like I said, these beats are fairly small, but 5%, 10% for a bank, not too shabby. You don't really expect to see, the massive beats like we saw back here in 2021, 47% back there. But these are nice, very consistent. And the analysts started kind of behind, but are trying to catch up here and up and to the right with the earnings estimates. But is this all really priced in? And what are they thinking about a recession for the U.S. economy? Yes, believe it or not, that is still in play. But will it impact much of what they're saying for 2025? We're going to see. So that's JP Morgan, the premier bank, reporting. And so we want to lead off with the premiers, of course. But I would be remiss if I didn't talk about one right on its heels, Bank of America, ticker BAC. Now, this has been in the news recently because Warren Buffett has been selling huge chunks of his shares basically every day for several weeks. He was selling a portion. He still owns a big chunk, but we have no real reasoning yet behind these sales. The same with his Apple sales. So what is the reason he's decided to lighten up? Is it simply because he has owned it for many years? Shares look fairly valued here, and he wants to cash in some of his profit finally. We don't know. But for the rest of us, a lot of people own Bank of America for its nice dividend and because the shares were cheap, especially last year with the banking crisis. These shares, too, have bounced off the 2023 lows. They're not at all-time highs like JP Morgan, but it's been a nice run. And look at the earnings on this one, kind of all over the place, but 2026, analysts really getting bullish there. But even, this year, kind of flat, but next year, not looking too shabby. So they have like I said, a good earnings surprise record, just 3 misses in the last 5 years, and then earnings going in the right direction. So the banks are going to be interesting here. I also urge people to watch the regional banks like a PNC or KeyCorp or many others. Wintrust is another one. They're a big bank in Chicago. Watch these regionals to see what is happening now that the bank is starting to cut. Are they starting to lend more, both to businesses and to individuals in terms of home mortgages and things like that. It's still early. The Fed has only just cut, so we're probably not going to see any of that in the third quarter. But listen in to see what kind of guidance they're giving for fourth quarter, how they're seeing the health of the consumer and businesses right now as we wind down the year. That's what I'm going to be watching all this week and next week, as we're going to get a lot of those regional banks coming next week. But it's going to be busy, as it always is in these first couple of weeks. We're going to get the Mag 7s this month, and those are always key to watch. So be sure to subscribe on our YouTube channel to get all of these videos. I'm going to be bringing them to you every week, as I always do throughout earnings season. So be sure to subscribe there to get them all. You can go there at zacks.com/YouTube or put in Zacks Investment Research in the search bar to find our channel. Subscribe so you never have to find it again. And I'll see you again next week with some more earnings charts.